The Foundation for Financial Freedom is pleased to have Ron Hawks, author of Climbing the Financial Mountain, here to speak with us about his new book. Ron, thanks for being here.
Well, thanks for having me.
Before we discuss your new book, can you tell us a little about yourself?
Absolutely. For as long as I can remember, I've spent my life focusing on expanding my knowledge of finance. Although I have a bachelor's degree in finance and a master's degree in business, along with 20 years of work experience in the fields of accounting and finance, my passion has always been centered around planning for my financial future. Since I was a teenager, I knew the last thing I wanted to do was spend 40 plus years working for a living. If I was ever going to retire before 50, I knew I needed a plan that focused on saving as much as possible and spending my money wisely. Even though my plan wasn't complicated, it did take discipline. By staying committed to my goals and never deviating from my financial plan, I was able to retire completely debt-free with a multi-million-dollar portfolio at the age of 43.
You talk about your father in the introduction, as well as throughout the book. What kind of influence did he have on your life?
Well, it's safe to say that my father was very instrumental in teaching me the importance of financial discipline. More importantly, he led by example, which gave me firsthand experience on the benefits of living beneath your means. My father used to always tell me that a dollar could only be spent once, so spend it wisely. He also used to say a good saver will always beat a good investor. It's safe to say that my father played a key role in developing my financial foundation and giving me the desire to expand my knowledge in the areas of saving, spending, and investing.
So why did you write this book, and what makes it different from other financial books?
Great question. Well, I wrote this book because I want to show everyone how easy it is to save for your future. The approach I use to build my wealth is nothing too complicated and can easily be replicated by anyone who has a desire to build a substantial nest egg that you won't outlive. In terms of what makes my book different than other how-to financial books, is that I'm explaining an approach that I personally used. Unlike most financial advisors and authors who provide strategies to build wealth, how many have personally implemented their advice with their own money? It's one thing to tell people what they should do to save for retirement, but it's quite another to do it yourself with your own money and live with the consequences.
Well, how easy is it for the average person to implement your spending and saving solutions?
Well, these solutions are minor lifestyle changes that will help the reader create real money that can be used to build substantial wealth. Most of these changes can be done with very little effort and won't adversely impact your lifestyle to the point where you feel you're sacrificing everything that's important in your life. To quantify what I mean, the average U.S. family spends $50,000 on items like housing, transportation, healthcare, food, etc. With the solutions I've outlined in Chapter 5 of my book, an average family spending $50,000 a year will easily save 20% or $10,000 per year. That's real money that will help get everyone on track to achieving their retirement goals.
The subtitle of your book is Wealth Building Retirement Strategies for Every Stage in Life. Elaborate a little bit on this and what it means.
Well, although the book focuses on building wealth prior to retirement, it also focuses on how to maximize your wealth in retirement to ensure you do not outlive your money. For example, there are sections within the book that explain strategies to maximize your retirement income, as well as how to spend down your assets in order to minimize the impact of income taxes and reduce your expenses. In addition, there's important information on end-of-life planning so that everyone will benefit from this. So, whether you are 20 or 80, there's something for everyone in this book that will show how to save and spend your money wisely throughout your life.
What do you feel is the biggest obstacle most investors have to overcome?
Well, this may sound strange, but the biggest obstacle by far is themselves. Although the typical investor understands that saving for their future is important, other immediate needs and wants always seem to get in the way. It's hard to make retirement planning a priority when it could be 20 plus years away. The desire to acquire a home, car, and other must-haves goes to the top of the list, and when they look at what's left over, the money's all spent, and there's nothing left to save for their future. This approach is the opposite of what a person should do. Instead of saving what's left over, focus on spending what's left over after you set aside a percentage of your income for retirement. This strategy will allow you to live beneath your means and ensure future financial success.
In Chapter 6, you talk about the psychology of investing. How does psychology impact how we invest?
Well, it's safe to say the one thing that gets in the way of the average investor being successful is their desire to find a surefire way to make a fast buck by jumping into the latest can't-miss investment. Although the rational side of the brain tells you this isn't possible, it's the emotional side that makes most of the financial decisions for the typical investor. A prime example of this is the average investor sees historical returns and projects out the success or failure into the future. This is why people buy what's hot and avoid what's not. We've all heard the term buy low and sell high, but why is it that the typical investor does the complete opposite? For example, just look at the average return investors have earned in stocks and bonds over the past 20 years through 2011 versus the index. For stocks, where the benchmark is the S&P 500, the average investor earned 3.5%, while the S&P made 7.8%. For bonds, it's even worse. The Barclays Aggregate Bond Index generated a 6.5% return, while the average investor earned less than 1%. And the reason why this happens is investors chasing returns and selling when times are tough. I discuss things like this along with other reasons why the psychology of investing has a huge impact on your success towards achieving financial prosperity.
Tell us about your retirement planning calculator.
Well, after looking at the retirement calculators available online, I noticed they all have one major flaw. Instead of focusing on your expenses in retirement as the baseline to calculating your financial nest egg, they use a percentage of your current income to compute retirement expenses. This just doesn't make any sense. Since your concern in retirement is to ensure your savings will cover what you spend, you clearly need to focus on your expenses. In addition, the calculator, which is available for free at my website, takes into consideration all your sources of income, such as Social Security, pension, and any part-time wages you earn, and computes each year in retirement the drawing down of your assets over your life expectancy to show that you won't outlive your money in retirement.
Well, everyone is told how important it is to save for their future. Unfortunately, very little is discussed about how to spend your money in retirement so that you don't outlive your assets. How does your book address this issue?
Well, I created 3 asset allocation models: a growth model, growth in income, and income model that provides the investor exposure to the appropriate asset classes through the use of low-cost index funds. With a handful of funds that can be purchased without any fees, an investor can create a diversified portfolio that's easy to manage and has a proven track record of success. In addition, I've developed 3 options to convert your assets into retirement income that gives the investor a choice as to how involved they want to be in managing their portfolio. These options, which are explained in detail in Chapter 11, range from reallocating assets each year to purchasing an annuity and reallocating on an as-needed basis.
Although you've made some compelling points about the important financial issues that are addressed in your book, briefly tell our audience what they'll get from reading your book.
Well, that's a great question. I think the one thing we can all agree on is that life is way too short. Time is a precious commodity that is the one thing you just can't buy. Trying to find that balance between satisfying today's desires and making decisions to guarantee a prosperous future is very difficult. But finding that balance is something that I focused on in this book, which will give every reader the confidence that they are making positive strides to achieving financial prosperity without making draconian changes to their lifestyle. If there's one thing I've proven in this book, financial success can easily be achieved if you're willing to make the effort.
Well, that's all the time we have for today. But if you're interested in finding more about Ron, his book, or just accessing his free financial tools, including the retirement planning calculator, go to his website at www.climbingthefinancialmountain.com. Thanks again, Ron.
Well, thanks for having me.